In today's video, I'm going to show you exactly how I'm trading the DXY, the Euro, the Pound, the Australian dollar, and also gold for the week ending July 28th, 2023. Okay, so let's not waste any time and dive right in looking at the US dollar index. This is the monthly time frame, and this is an ascending channel that I've talked about recently. You can see that off of these 2011 lows, we do have these two swing lows here for the DXY. We've also got these three highs. And since this time back here, the DXY has been carving lower highs and lower lows. So that's the first thing to consider, that we do have the market coming off of this long-term resistance level and trending lower. Now, if we look at the 3-day time frame, okay, this is also something that I've mentioned recently, where on the 3-day you can see that we do have the market breaking down from this trend line off of these lows from 2021. We've also got these two swing lows right before the breakdown. Okay, so this was the breakdown through here below that area around 102. Now, the thing to keep in mind though, last week is we did see a potentially significant development from the DXY closing back above this area around 100.8. So on the daily time frame, if you'll notice, we do have the low back here. We've also got this one from back here in April. So this was the previous year-to-date low. And as you can see, the DXY did reclaim that on Friday. Now, we'll get to the short-term ascending channel you see here in a moment. But the key for dollar bulls this week, going into Wednesday's Fed rate decision and statement, is going to be to reclaim 101.25. All right, that's going to be key because we do have a lot of closing prices through there. And if you look at the 3-day time frame, it's also significant there because the market never did close below 101.25 on the 3-day. So you can notice back here, we've got all these closing prices through this area. So 101.25 is going to be resistance and 100.8 is going to be support, given the fact that the market did close Friday above these two lows back here. Now, looking at the hourly time frame, this is going to be something to monitor this week. So you can see here that we do have an ascending channel on the hourly based on these three highs up here. So we've got this high back here, we've got this one, and also this most recent one. And then we have the swing low and also this one. So given this and the fact that the market, like I said, did reclaim 100.8 on Friday, I am cautiously bullish on the DXY going into next week. However, we do have, once again, FOMC on Wednesday, and also that 101.25 level that the market has to get above. So given the fact that the DXY is trading right here at the top of this channel, I do think that we could get maybe a rotation higher early next week, followed by a pullback down here into 100.8 to retest this area down here, and then potentially a bounce from there. So the two scenarios I'm watching here for the DXY is going to be, in either case, I think we get the pullback down here toward 100.8, but then from there, it's going to be a matter of, do we see the bounce back here toward the highs, potentially the top of this channel up there around 102, or do we get that rotation lower, the sustained break below here for that move back toward 101? Okay, so this right here, when the market comes down here in this area, if we get that retest, that's going to be a significant moment for the DXY to determine if we are looking at a higher dollar following FOMC, or we get that breakdown from the DXY. But either way, like I said, based on where the DXY is trading, where it ended last week, I do think that a early week pullback down here toward 100.8 is likely over the coming days. So next up, we have the EURUSD, and this is another reason why I think we could see the dollar rally this week, because we do have this trend line off of these highs from last year. And this is a level that I've talked about recently. You can see the lows so far this year. So it has flipped to support in 2023. And if we take a parallel level and drag it up here toward these lows, you can see that we do have three highs right here off of the same level. So this is the 2-day time frame. And you can see where last week we do have a fake out from the euro. So a fake out like this does tend to produce an extended move in the opposite direction. So for the EURUSD, that would be a move lower. Now, looking at the daily time frame, these are the three highs that I talked about. So right off this level, we've got the closing price back here. We've got this high, this one, and also this most recent one. Okay, now this up here so far is a fake out from the EURUSD, which, like I said, could trigger that move down here toward the 110.70 highs from back here. However, we may get a retest up here around 111.70 to 111.80 before we get that rotation lower. And that's especially true when we look at the DXY. What I just talked about on the DXY is that potential pullback toward 100.8, which could equal a retest up here right around 111.70 to 111.80 for the EURUSD before that rotation lower. Okay, so as of right now, this is a fake out from the euro as we go into a week with a lot of volatility set up with Wednesday's FOMC. So I am looking for lower here, but like I said, I do think we could see an early week rotation higher into that 111.70 area. So if you saw last week's forecast, what I talked about here on the pound is if we look at the 4-hour time frame, you can see that we do have this channel in place since these lows back here. We've also got this swing high And this up here was a fake out. So what I talked about in last week's forecast was that the pound had closed right back below this. So through here, and you can see where we got a rounded retest right up here in this area. So this was your fake out. This was your retest for that short opportunity. Now, the first key level was 1.3, which it blew right through that and came down here toward 1.29. So the market for the week ahead is kind of sitting on support right here at 1.285. So looking here at the daily time frame, you can see why this is significant. Okay, so based on these highs from back here, we've got this high, this one through here, and also this one. So you can see right now the pound is holding right above that level. However, 1.29 is also going to be significant because if we look at the 4-hour time frame again, you can see where 1.29 was support back here. Okay, support through here. Once again, we got the close below and now resistance. Okay, so for the week ahead, 1.29 is going to be resistance, and this area down here between 1.28 and 1.285 is support. Now, if we do see the DXY continue to reclaim levels, including that area around 101.25, then we could see a breakdown from this channel for the pound, in which case I'd be targeting lower levels like this area down here around 1.263. All right, so we've got these highs back here and this low. So if we do get a breakdown from this area, that would be my first target there. And then potentially lower levels like this pivot through here and also maybe even 1.23. But of course, the DXY would have to do a lot of reclaiming in order to see that kind of move from the pound. Of course, alternatively, and for now, this is not something that I would short because I don't like shorting a market that's already made this kind of move. I do think that the opportunity on the euro is a little bit better just given where the market is situated. But if we were to get, like I said, a sustained break below here, below this area, then that could be a short opportunity. Or if we get that move up here followed by bearish price action, that could also be a short. But you've just got to keep in mind, like I said, the market is already down quite a bit here over the past week. Next up, let's talk about the Australian dollar, which we've had this range intact now between 0.68 and this area down here around 0.658. So this is the range that I mentioned recently. You can see we had a fake out below, we had the fake out above, and then another fake out above just recently. Okay, so this last week was a short opportunity that I did take, and I mentioned this to members in real time. So we caught the entry right here at 0.6808. Again, I did share this with members in real time, the entry right through here. So I waited for the market to come up here in this area, reject from that, close back below here on the intraday charts, and then went short for a target down here at 0.67. Now, it didn't quite make it there on Friday, so I did take profit down here. So it was about a 79 pip profit, which was not bad for about a 24-hour trade. And by the way, guys, I talk about my trading group a lot, but if you are interested in joining, here's what you need to do. So what you need to do is look below this video here on YouTube in the description and click on that link for Blueberry Markets. Or if you're on the website, scroll down from this video and you'll see the link right there. Head over here to this page and fill out this application. Okay, now once you fill out this application, you are going to have a choice from either a 20% deposit bonus or your first trade free, meaning that if your first trade is a loss, they will refund you up to $300. Okay, so it's literally a risk-free trade, or you can get that 20% deposit bonus. So once you sign up over here, you're going to deposit $500 or more and then message me on the website. I'll give you lifetime access to our trading group where I provide daily videos, exclusive setups, and also my trades in real time. So I'm going to show you my trades that I'm taking on the EURUSD, Bitcoin, etc. So once again, see the link in the description here on YouTube, or if you're on the website, scroll down from this video and you'll see the link to Blueberry Markets right there. Okay, now looking at the week ahead, just like some other markets, we do have the Australian dollar trading down here at a near-term support. So this area between 0.67, so right down here, and also 0.672 is going to be key support for the Australian dollar. We've also got the bottom of this descending channel that comes in right in that area. So based on where the DXY is trading, if we do get a rotation lower from the DXY early next week, so a pullback into that 100.8 support for the DXY, then we could see that move higher for the Australian dollar. Now, whether the market gets all the way back here toward 0.68, we'll have to wait and see. But I do think that from a risk-reward perspective, that is the highest conviction trade, and of course the one with the best risk-reward. So for the Australian dollar for the week ahead, I do like the idea of looking for shorts up here if we get it, just because of the fact that, like I said, the market is trading below that after closing above it, just like we saw back here. So this is once again just one more fake out from the Australian dollar, very similar to what we saw back here. Okay, so as long as 0.68 holds, I do like looking for shorts here toward that area around 0.67 and then potentially toward those range lows right around 0.66. And last up, we have gold XAUUSD. This is a trend line that I mentioned recently before the market tested 1900. You can see we've got the high back here from 2022. We've got this high. This was a pivot through here. And then we had 1900. So I talked about this before the market tested it, and we got a nice bounce from there. I also mentioned how the breakout above 1940 could trigger that move up toward 1980. So far, gold has been playing out really nicely based on the technical levels that I've discussed. Now, looking at the daily, you can see where the market so far is. Once again, this is our resistance level right here at 1980. We've also got support down here around 1940. So as of right now, this is just a range trade for gold, for XAUUSD. Now, we do have some support here at 1960. This is the mid-range of the range between 1940 and 1980. So I would expect a bounce maybe early this week up here toward this area around 1970, potentially back toward 1980. So a bounce there for gold early next week, Monday, potentially into Tuesday. So looking right here, this is going to be the support area for gold. Okay, so right through here, this consolidation to where we could get that bounce early in the week, back here toward this area, right, 1970 in this region, followed by that rotation lower down here towards some of these lows and potentially that retest of 1940. So given this right here, given the breakdown that we saw last week and the significance of 1980, and also what we're seeing from the DXY, because the two are inversely correlated, I do think that a rotation up here into this area, followed by a rotation lower down here into 1940, does seem likely for now. Okay, so for now, gold is just a range trade between 1940 and 1980, nothing more, nothing less. We could see higher from the market, but this is also a case where you have to trade what the market gives you. And right now, the market is giving you a range between these two levels. All right, so that's it for today's weekly forecast. Be sure to smash the like button and also subscribe to the channel and click that bell icon. And don't forget to sign up to Blueberry Markets, where you can get your first trade free or a 20% deposit bonus. See the link in the description here on YouTube, or if you're on the website, scroll down from this video and you'll see the link to Blueberry Markets right there. Trade well next week, and I will talk to you again on Monday.